All right. Good morning, everyone. This is Stephen from Pravada Insurance Services. Just want to say thanks for joining us this morning. Today we'll be speaking with Keith Bumgarn. He's the Director of Advanced Markets in the Pacific region for Penn Mutual about the ins and outs of defined benefit plans. If you have any questions, you can type them into the little chat box down in the left corner, and we'll address those at the end of the presentation. So I'm going to go ahead and hand it over to Keith.
Thank you very much, Stephen. Good morning, and thanks for everyone for listening to this workshop on the opportunities in the small business market to engage and work with not only small business owners but also with their tax advisors. And I want to wish everyone a happy St. Patty's Day too. Whenever it's March Madness, it's also tax season, and this is the time when your business owner clients and their CPAs are asking one question: how can we reduce our taxes? So I want to focus on basics and getting back to the basics. A lot of people think you need to be an expert in the business market. I am not one of them. We'll show you how to work together as a team, the roles, and the process that we use to help you reach the next level as far as production. And we appreciate the opportunity to have a relationship with Pravada. It's all about and networking. So in the next 45 minutes, what I'd like to do is just share with you one or two ideas to generate another $100,000 of income for you, at the same time adding value-added services to your clients through engaging with CPAs. And we've all heard the story about thinking outside the box, but I believe that the question is maybe you should think inside the box. So when I do continuing education seminars for CPAs, I ask the question, how many boxes are on this slide? And you don't have to answer all at once, but some people say 1, some people say 16, some people say 17, and some people say 29. The question becomes the opportunities within the box, working with your existing clients through their CPAs to show them the opportunities in the small business pension market. And again, later on I'll show you some ideas to show you how to work that market. So really, the agenda is just to make you aware of the opportunities. If I were talking to CPAs, I'd be talking code sections, but I want to keep it pretty simple. Is most of you listening in are business owners, so if I could show you a qualified retirement plan, 100% deductible through the business, and the business owner got 90% of the benefit towards his pocket, wouldn't they be interested in doing a free feasibility study to see what types of qualified plans are available? So the key is the fact finder, which we offer, and there is no charge for the feasibility study. And most people I talk to want to save taxes and save for their retirement, hot buttons. And I'll also talk to you briefly about a business model that we've created called the Professional Advisors Alliance Program to work with CPAs and enrolled agents. And before I get too far, I want to introduce a gentleman that will not be talking today, but is a regional marketing director and is a relationship manager for Pravada, Kevin Lord, and he's actually sitting in my office. So say hi, Kevin.
Hello.
So just to plant the seed, our niche market is small businesses, 1 to 25 employees. I have a lot of pension clients. The only employee in their business are themselves, maybe their spouse. This is what I call the micro business market, and nobody's working this market. Everyone's after the medium to large size corporations, talking 401ks. I want to focus today on what I call employer benefit plans. And because of tax law changes, you can have both an employee benefit and an employer benefit plan. I'll show you some examples of that. And as most of you know, any type of tax entity can have a qualified plan: a sole proprietor, a partnership, a corporation, an LLC, an LLP. My role is to make sure that the CPA understands the rules as it relates to the different types of tax entity. The advisor's role is simply to introduce their clients to concepts like retirement planning, succession planning, estate planning. So what we have found by doing a feasibility study focusing in on pensions, it leads to other opportunities. Again, we focus on employer benefit plans. We'll be talking about defined benefit plans, profit sharing plans, new comparability profit sharing plans, etc. And we try to make pensions simple just by identifying here are the players, here's their role, and walking them through the process. And as most of you know, that even though we're in 2011, I'll just share with you one idea. It's not too late to establish an SEP, a Simplified Employee Pension, for 2010. So if you have clients or advisors that hate to pay taxes and they're looking at their tax situation now and they haven't filed their taxes, they might be a corporation or a sole proprietor, they might be going on extension, the IRS allows you to establish an SEP for 2010 today up until the tax due date, including extensions, and to make the contribution and take it as a deduction for 2010. And so it's a great door opener, and then you do a study to show them maybe a different type of plan for 2011. So again, if you haven't talked to your CPA lately, and if you can get him or her on the phone, talk to them about 2010 opportunities with the SEP IRA. A lot of people have also heard about simple IRA plans. Simples are not simple. In fact, a lot of simple plans are sold probably for the wrong reasons because they're simple. There's no 5500 forms. If you're not aware of the IRS Simple Compliance Checklist, I'll actually be providing that to anybody that wants it. Just email, Pravada, and I'll make that available to them. It's also on the IRS website. 10-question checklist, and if you answer any one of the 10 questions no, your simple IRA is disqualified at audit. Again, compliance is important, and that's where we work with the CPA to make sure the CPA understands what the compliance issues are. It's interesting to note, I would typically ask Kevin this question, but he's already sleeping. Have you ever thought about what percent of small business owners have qualified retirement plans? Well, there was a study done, and it's interestingly only about 17% of small business owners have a qualified plan, ranging from an SEP to a 401k to a defined benefit to a profit sharing plan, which means that over 80% of the small business owners don't have qualified plans. And there's reasons why they don't, but a lot of it's simply the awareness issue. They don't know what's available. They have problems. They hate to pay taxes. They want a fund for their benefit, but they simply don't know where to go or who to go to get information. In fact, this survey on this slide pointed out 3 major reasons why they don't have plans. 1, the owner can't get enough of the contribution to justify the high administrative costs, because every time you turn around, there's tax law changes. And if those listening in are in the pension market, you know of EGDRA, the PPA of 2006, which I actually do educational seminars on. And there are some incentives in the EGDRA, the Economic Growth, Tax and Relief and Reconciliation Act, that provides incentives to encourage small business owners to set up plans that we're going to talk about, as well as tax credits. That's the type of information. Become a resource to your business clients and your CPAs, because they don't know this information. They're getting information from, for example, Susie Orman, the USA Today, and sometimes that's somewhat biased, and they don't tell the whole story. So our role really is to make you a resource for your business owners and your CPAs. And the third reason why that this survey alluded to, that why small business owners don't have qualified plans, is they don't know where to go to get information, like we talked about earlier. So with that, let's just talk a little bit about the pension package. It is a package. It is a process. It's not a transaction. If you've ever sold a qualified retirement plan, you know it takes 2 or 3 meetings. You get the business owner, the CPA, the attorney involved, but the package is pretty straightforward. It consists of plan design, showing the clients through a feasibility study the different options available. We have a 2-page fact finder that we use, that it will be available hopefully on Pravada's website very shortly. The second P is plan administration. We have third-party administrators that actually do all the paperwork and the compliance. And the next step is the fun step for the advisor. Once the plan is established, once you've engaged the TPA, you take applications on the life insurance and or the annuity. Now, we'll get into the life insurance products, the programs that Penn Mutual provides on an individual case basis, or if any people listening in want to talk to me directly about how I position life insurance in the plan and the exit strategies that I use, I have a process that I call the DAD principle: deductions, asset protection, and distributions. The fourth and fifth P are plan compliance. Really important when you work in the qualified plan area, because it's one thing to take the deduction, it's another thing to keep it at audit. My role, since I've been doing this for about 34 years, is from a compliance standpoint. I'm the quarterback between the advisor, the third-party administrator, and the CPA to make sure all the players communicate and talk to each other. And it truly is a team approach. And if the team works smoothly, huge referrals from CPAs by working this small business pension market. Here are the players in the pension market, and it's important, again, to identify the players and know their roles. The IRS, the Internal Revenue Service, the Department of Labor, these are the watchdogs of the governments. They handle the compliance on 5500s. The small business owner, as we mentioned earlier, our niche market is small businesses, 1 to 25. Most of my clients have less than 10 employees, and they want two things. They want deductions, and they want to maximize the benefit towards themselves. And 401ks and simple plans do not do that. The CPA or the accountant is a huge key player because they are the gatekeepers. They are the trusted advisor. They're the ones that the small business owner turns to. And I think I can say this because I'm CPE approved to do seminars. CPAs know taxes. They're looking for a third-party resource to educate them and keep them appraised of pension tax law changes. That's my role that we provide through Pravada. The insurance company and TPA, the third-party administrator, Penn Mutual is a great company. Pravada's done due diligence on them, a 164-year-old mutual company. And I have 3 or 4 third-party administrators that I use. Now, if any people listening in already have relationships with third-party administrators, I would love to talk to them. A lot of third-party administrators don't do defined benefit plans or don't allow life insurance in the plan. So the agent and the broker are the key component because you're the relationship manager. You're the one that's going to introduce your clients, prospects, CPAs, third-party administrators to us so we can do a feasibility study. And I want to stress the first step in the process is the feasibility study, a 2-page fact finder, and really the objective of that feasibility study and the opportunity is to answer one question: is a qualified or a non-qualified or a combination of both feasible for that business? And what we have found by doing a feasibility study, which there is no cost to that, and if the CPA wants to create billable hours, this is one way to do it. But we have found that whether you sell a qualified or non-qualified, you're going to sell something because you're going through a conceptual process based on their objectives. It's not a product sale, even though you will sell product. It's more of a process sale. This is exciting, Kevin. Just to put it in perspective, and it's not all doom and gloom, but these are the headlines that your clients are reading in papers and hearing on the radio. Social Security in jeopardy, pensions being frozen, the Pension Benefit Guaranty Corporation, verge of bankruptcy, people aren't saving, healthcare is skyrocketing. So those are the problems, but there are solutions. And I actually spent 20 years in Indiana, and Dave Letterman, grew up in Indiana, and he puts together the top 10 list. Here's the top 5 list of clients, my clients, their concerns from a retirement planning standpoint.